Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez, the backup Chippendales dancer. I am fully ready to go today. This may seem like a joke, but this is serious business. I mean, sometimes those main dancers, they go down. Maybe they get hurt from dancing too hard. Maybe they call in sick, and backup dancers got to be ready to go with the drop of a hat. So I am going to be going ahead and streaming today, but if I get called in, if somebody does go down or get sick and they call me in, I will have to end this stream early because today might be the day that they finally need old Sawcruhteez, the backup dancer. So I appreciate everybody for tuning in. It is Halloween, and I hope everybody is enjoying their day. It is about 5 o'clock in the evening where I am, so sun's still up. Not time for any parties or trick-or-treaters just yet, but hopefully some people elsewhere in the world are already having a good night and a good Halloween themselves. So thank everybody for tuning in, and I will go ahead and dive right into some charts. We had some interesting action earlier today. I was trying to find a chart, but I was unable to. Basically, from what I can tell, there was just some nasty, nasty wicks that occurred on a few exchanges that may have been relating to Coinbase Pro shutting down. After that happened, we saw, I think, Deribit dump right down to 7,000, and the craziest action that I saw all day was on the exchange BTSE, where the price first shot up to $15,000 and then dumped down to $7,000, all in very short order. So that's the kind of thing that definitely, that sort of stuff isn't necessarily common or to be expected, but when you're dealing in crypto, those are the types of things that you got to watch out for, and that's why it's very important to be using stop losses, even if you think that the price is very far away from where your stop may get triggered. If you were on one of the exchanges that had those massive wicks, then you were likely, wiped out, especially if you were trading on any type of leverage. And just another good example, that's a scary thing on Halloween that I don't like to see. That's definitely something that I would pay close attention when that type of stuff happens, where it's happening, and try to stay away from the ones that it seems to be happening on more than others. Something like BTSE, that exchange is, I hadn't heard about them until recently, and most of the things that I've been hearing haven't been great. It's been a lot of this type of stuff where you just really don't know what's going on, if it's maybe a whale, a manipulator that is, just taking advantage of a thin order book, or if it's more some insider type of stuff. It's really tough to say, but again, that's why I think it's important to be paying close attention to where this type of stuff happens. A lot of people are for one reason or another, have a lot of bad things to say about BitMEX, and often it's due to something like that happening, which absolutely does happen on BitMEX and the altcoins on the lower liquidity pairs. But in my experience, I have not found that to be very prevalent on the BTC USD or ETH USD pairs, and that's another one of the reasons why I definitely feel comfortable trading there. And again, today when we saw that action happen elsewhere, BitMEX was able to, stay strong, as we see with Bitstamp and some others that did not have that sort of situation happen. So, once or twice having something like that happen on an exchange is one thing, but if it's a consistent pattern, then that's something to pay very close attention to and definitely stay away if at all possible. So yeah, let's go ahead and dive right into some charts. After yesterday's stream, I did notice a pattern that could be very important, so that's where I want to start. It looks to me like this recent action could have been a falling wedge, and that's something I'm looking at closely. I'm still not entirely convinced, and I'll tell you why, but there is a lot of reasons to believe that this is a legitimate falling wedge that has just confirmed on that recent big move to the upside. And why this would be so important to me is that it confirmed back in here, and that's where the entry would be signaled, and being that the price is still at basically that same price in that same territory, then it could be signaling an entry. And then B, also want to use that to measure a move, specifically if I do decide that that this is a valid falling wedge. So we'll just go ahead and take the top to the bottom as our way to measure a move. And it looks a little weird because it's backwards here, so I just always kind of do something like that. It's not a timing necessarily measurement, so you don't have to do that, but it just looks weird to me without it, so that's how I do it. And if we do consider this a confirmed falling wedge, then the target would be about $13,000. We would say maybe 12,960. I did post a chart yesterday, and I can't remember exactly what I said the move was measured at. Let's get that back up. Yesterday I had it at 12,870, so somewhere in that range would be the target for this pattern. And the one reason why I am a little bit suspicious is going to be the volume. Let's see if we can get it up there and then maybe make it a little bit more visible for everyone. And while I'm doing that, hopefully it'll let me, maybe not. Let's try the other one. Not sure why I have two. Okay, maybe we're going to be having some issues today. Hopefully everybody can, oh shoot, didn't mean to do that. Apologies. We'll get the volume back up here. So in a falling wedge, what we want is for the volume to be declining as price goes down, and then have volume increase as price breaks out. So this looks money right here with this volume spike as price breaks through the top boundary. The one reason that I'm not necessarily thrilled with this is because of this selling volume spike that occurred down here around 77 to 82. We got a big spike in selling interest, which you really, specifically as price works its way closer to the bottom of this pattern, you really want that volume to be dying down, showing that there's really very little supply, and then demand pick up as price breaks through. So seeing that has me suspicious, but I don't think it's enough to entirely discount it. This is one of those situations where, you know, if I do decide to end up taking a position, which I don't think I will, then I may just scale down the exposure due to this. The volume for patterns is very, very important, and that's something that I think many people may not pay close enough attention to. If you really get the right volume profile with a pattern, then its success rate is much, much higher as far as I'm concerned. Whereas if you get something like this, which is really out of line with what you'd expect, like here, this was money. Right here, as we sold off from here, the volume decreased, and then it really picked up right in here, which I guess you could say makes sense because we did break down that descending triangle that was in effect, you know, right in here. So that's what you want to see with the descending triangle breakdown, is the volume increase. So maybe that can be used to maybe alleviate some concerns about this. It's not like this
big spike. It's not like it all occurred down in here. It was mainly, I think, due to the chain reaction of breaking this down and breaking it down in very short order. So it's something that I am going to definitely be paying close attention to and keeping in the back of my mind for a price target. But I am not thrilled about using it to, I don't have a very high confidence level about this pattern due to the selling volume that we saw down here, kind of pretty darn close to the lows of the pattern. If it continued to decrease as price went down, then this would be perfect. Since that didn't happen, I'm maybe like 60-40 gonna call this a falling wedge, maybe 65-35. I mean, it definitely it sure seems like it fits the bill, but it's something that I am suspicious of for the reasons mentioned. So let's go ahead and take a look at something else, something that when I first really got into technical analysis, volume was literally the most important indicator to me, and it's something that I haven't really talked a whole lot about lately, and I do want to start paying closer attention. Specifically, this visible range volume profile is something that I have found to be very powerful in the past, and it's something that I don't want to forget to look at. It's a fine balance between having too many indicators on the chart and kind of overwhelming yourself versus leaving something out that can really be very important. And this last move really reminded me how important this thing can be, and it's painting a pretty interesting picture right now. So what you'll notice if you've never used this before, I'm not sure what level of membership you need, but as long as you are high enough, you can go here to the volume profile and then click on visible range. And what you'll notice is if you scroll out, it will really change based on how you're scrolled, because what it's doing is taking into account the volume at price. And if you have something like this in your chart, then it will account for the volume that occurred at this price. But if you're zoomed in so that it doesn't have that, now we see that volume disappears, because now no longer is it taking that into account. So in general, what I want to do is kind of try to look at a zoom that includes the recent similar price. So like right in here is a part that I want to take into account. So basically anything from here up until here is absolutely what I want to look at. And let's see here. So what we notice first of all is that this huge massive spike that occurred back on the 25th found resistance at this high volume node. So essentially, if you have these are considered nodes, and if they're small, like over here, that's a low volume node, and if they're high, it's a high volume node. So it tells you that there's a lot of volume at this price, from 10,100 up to 10,380. That's where a lot of the volume has occurred. That's the second highest volume node, it looks like, compared to this, and that this is our highest volume node, and this red line represents the point of control. So that's where the most volume has occurred based on this zoom here, which is I don't know what, like 6 months, I would say. And therefore we can kind of draw some conclusions, specifically when you have a gap in the volume profile. That's kind of one of the most important things to me when looking at the volume profile, is a gap like we see right in here, where we've got high volume all around it, and then here we've got very, very little volume. And one rule that I have found to be very reliable is that gaps in volume tend to get filled. So it kind of tells us, like, we really don't know, is this price support or resistance? Is this price real here between 87 to 89, and we really don't know because there hasn't been any volume that's occurred at that price. When we fell down, well, we can even take it back here. When we broke through and rose above this price, it shot right through, didn't really consolidate at all, which means that price just shot right through, and it tells me that it's not necessarily a real price. It hasn't proven itself. It was more like potential FOMO buying, or just it's not something that is as reliable as something like this, where there's a lot of volume at this price. And then here, when we fell right through it. And then here, when we pumped right through it. So this is an area where I really am expecting price to return to, is the 86 to 89 territory that's based on this gap in volume profile. And it would be very interesting if we could form like some sort of bull flag where we, and that's not very good, but just pretend that it is. If we just kind of continue this downward slide and then are able to consolidate, spend some time here between this gap in volume, and then see if it is able to establish itself as support. If it does, then that would also be a throwback to this trend line, and it would be really looking strong and ready for a move to the upside. Until then, we really don't know what will happen. Of course, we don't know if the price will get there, but if it does, we don't know if that will be support or resistance. If you are above a high volume node, then it should be support, kind of like we see back in here. And if you're below a high volume node, then it should be resistance. If you are pulling back to test a gap in the volume profile, you really don't know. And if that does fill and hold as support, then I would definitely expect this high volume node to get broken the next time around. And we can see if that breaks, there isn't a whole lot of built up resistance above that price, unless that's where we maybe want to zoom out to see if there was volume back in here. And sure enough, there really wasn't. So this is definitely a very powerful tool that I will be using quite regularly, and want to not neglect the volume analysis, because that is something that is very important to me. And we can see, if we zoom out and take into account this price, basically anything above 75 dating back to 2017, we notice how price did basically find support at this point of control. At this high volume node right here is where this sell-off found support, at least temporarily. There was that head fake to the downside, but that was nothing more than a head fake as far as I'm concerned, specifically in hindsight. So therefore, I have no problem saying that this high volume node did hold as support. And as long as we can continue supporting above that, now we're above this point of control and high volume node, so it should be support. And when we zoom out and take in more price action into account, we don't see that gap anymore. And something that you may notice is this gap that is down in here, which is something that I would be paying very close attention to if we do end up getting back below this point of control. That's getting way ahead of ourselves, but that is something that jumps out at me and tells me that based on the rules of the visible range volume profile, you would expect this to get filled, but that doesn't always happen. And as long as we're above these high volume nodes in here, this is really where I'm very interested in buying. Was originally basically back in here, I was very interested in this 59 to 68 level, and a big part of that reason is due to this volume profile showing a lot of support. And as long as there's a lot of volume at the price, and then I would expect it to be a real price. I'd expect it to be one that isn't just I'm trying to think of how to describe a real price versus a fake price. In my mind, a fake price is something that happens on extremely low volume and is unlikely to sustain. Like if we have, if price moves up and we have like 2 people buy at high prices, well, that tells you that there isn't a whole lot of demand. And sure, that price was there. There was some buying and selling that happened, but it's not expected to be sustainable if there's very, very little volume that occurs up there. On the flip side, we have so much volume that's occurred down in here dating back to 2017 and 2018 that this really should be a sustainable price. And it looks like so far that is where this has found support, is somewhere on the upper end of this cluster of high volume nodes. And it does look like this one is expected to be tested right in here. And if that occurs, I would expect it to hold, just based on this volume profile analysis. So one other pattern that I wanted to go over before moving on was that one that I missed and am now looking back. I was out of town and wasn't really paying attention to the charts, but definitely this was one that made me kind of wish that I was using, high focus and a lot of regular analysis, because this did form just pretty much a textbook broadening bottom right in here, where it looked like, and these broadening bottoms are really tricky if you don't recognize them, because basically you create a higher high and you would think, okay, now it's time to bounce or maybe even fully reverse. But as soon as you create a higher high, then it comes and creates a lower low, and you think, oh my gosh, now we're really going to break down, and things are looking awfully bad. We just broke down horizontal support, just made a lower low, and then boom, you take off to the upside. So this is a pattern that if you don't recognize it, it can be really, really difficult to trade that environment. But if you do recognize it, you can get some really, really good opportunities. And this is one that basically you can use just these trend lines and trade it as a traditional broadening top, or Tyler Jenks came up with his own sort of way to trade these patterns, which he calls Selgin, and this is one that would qualify as a Selgin buy setup right here. Actually, perfectly on this candle right here is where that would have occurred. Basically would have got you in at the perfect timing. And again, how he traded those, how he set up that system is when you have you look for like basically a partial Bill Williams fractal with a low, it's only 3 candles, low between a higher low and a higher low. So right in there, and then that gets taken out and boom, entry is signaled. And then he's got his own trailing stop loss system that we did do a webinar on a while back. If anybody's interested, I believe all those webinars are now on Tone Base's website, and that's definitely a very powerful system that he would trade as a full stop and reversal. Basically, if his he would be looking to trade to the downside and to the upside. So interesting to catch this in hindsight. Doesn't do us a whole lot of good now, but it is good to know that if I'm looking at trying to figure out, do we have a falling wedge? Is that a real falling wedge, or is it maybe one that doesn't qualify for one reason or another? And then we see another kind of bullish reversal pattern. It kind of leads, it gives some sort of validation to the falling wedge, seeing this broadening bottom. So love seeing multiple patterns that point in the same direction, and this could definitely be one of those scenarios. So okay, let's go ahead and take a look at the normal indicators. Got to pop on the moving averages to see that now we are spending enough time here that the 50 EMA has started to move back up. And we can look at something else that has been very important to me that I actually discussed. Well, I guess if we're not going to be able to do the settings, I don't know what the heck's going on. Let's try pulling up another one. And as I'm doing that, I hope I'm not the only one that's dressed up on this evening. And if anybody else is, definitely send me some pics. I have tweeted something out and would love to see what anybody else is dressed up as today. And TradingView is not letting me click on the settings, so I'm going to just try to refresh really quickly. Hopefully that will work. If not, we'll just have to move on. Okay. Want the daily. Let's see if we can. All right, good. So something that I talked about at the financial summit, I gave a spiel about moving averages, and I got a little bit deeper into them than I usually do, and that's specifically how I like to use both exponential moving averages and simple moving averages, and kind of when, don't tell me, really? Maybe that will work, okay. And when I prefer to use each. So let's just do purple for the simple moving average. And this was a great example where we were looking at these charts. I was looking at these charts right around in here when it looked like the death cross was coming in, and very close. You know, it really looked like that was going to occur. And I talked about why I didn't necessarily think that it was going to happen based why I thought it would have a hard time for this to occur, and that was based on the 200 period simple moving average and its angle. I specifically said that one of the reasons why I will use the simple moving average is to determine trend, and this was still angled very sharply upwards, so as it made me think that it would be difficult to get this crossover, and if we did, it'd be difficult to really go down further until we got this moving average to kind of roll over like so. That's really the setup that I look for, is not only a death cross with the EMAs, but the SMA starting to roll over. And that's the thing that I really like about the SMA, is it does a really good job of illustrating trend, and it's really hard to reverse it, specifically longer period simple moving averages. Like you basically will never see a simple moving average go from straight up to like straight down like that. Like that just doesn't happen. It will roll over, and for it to roll over, it takes time. This doesn't happen in just a few candles sell-off. It takes time for this to roll over, and as long as you're below a bullish long-term moving average, you should really expect that long-term moving average to be a bit of a magnet. If you're oversold in a bear market, it's going to be hard for it to continue going down further, and that's something that the EMAs don't do nearly as good a job of. As we see, like right in here, it can go from down to up in the matter of like a couple candles, where it's just down to up. So that's one area where I strongly prefer simple moving averages, is determining trend, because of how hard it is to reverse that trend, and how much it means if you are below a bullish moving average or above a bearish moving average, and then looking for the ideal setup where you get a death cross with the EMAs after this has rolled over. So I have been paying close attention to these moving average crossovers, and I haven't mentioned this simple moving average live on stream. I guess it's something that I have tended to kind of, one of those details I've tended to not want to fully elaborate on. There, you know, some cards that I want to keep relatively closer to my chest, but I definitely think that this is an important time to discuss you know, some of the areas where exponential moving averages can be complemented with simple moving averages. And if I am having to use only 3 moving averages on my chart, this is them right here. it would be the 50 and 200 EMA and the 200 SMA. Those are the moving averages that I feel like I can't really do without, and I can do without, you know, basically all the other ones, especially for the large majority of the time. So pay attention to this now turning into support. It was resistance, and now it is still angled up sharply, and price appears to be supporting in there. So something else that you guys can maybe pay attention to or look into for yourself is when you get an SMA crossover that crosses an EMA of the same time period. For example, back in here we had the 200 EMA, and it's a good example of where, like right here, you get the golden cross, and the SMA is still down, but barely, and it quickly starts to turn. So like right in here was just absolutely money. And then notice how the the EMA crossed above the SMA. These are both 200 periods, the orange and the purple. 200 EMA crossed above the 200 SMA, and now notice that we get the 200 EMA crossing back below. So not only can you use the SMA to determine trends, but you can also pay attention to the crossovers that occur with the EMA on the same time period. These are things that are definitely quite important to me, and we'll be definitely paying attention to see if the EMA is able to cross back above the SMA, and that would be very important for a number of reasons that not going to get into all of them today, but you can, I would suggest looking into that yourself and just backtesting a little bit of these EMA and SMA crossovers. This is something that I talked about with Tyler Jenks, and we noticed how well it can work specifically in hyperwaves or in parabolic markets. So definitely give that a look, and if you find out anything interesting, definitely think about how to implement that into your trading system. Okay, let's see what else there is. Oh, yeah, one thing that I needed to clarify from yesterday. And let's go ahead and remove that, and remove that. Okay. So yesterday I was mentioning how I thought that this should be a setup candle on the Peterbolic SAR. I was looking at this candle as the lowest low of the downtrend and saying that, well, this closed above that, so this should definitely be a setup candle. And some of you caught my mistake, and appreciate anybody who was paying close enough attention to do so. And what the issue is that this isn't the lowest low of the downtrend. It was actually on this candle, right? The wick here definitely created a lower low below this, so therefore this candle is the one that creates the extreme point of the trend, and therefore you need to close above this high to get a setup. And this is one of those situations where perhaps the Peterbolic could leave some room to be improved, and maybe you just need to mentally make some adjustments yourself. There's specifically two instances where I am not really where I'm going to be adjusting the rules myself, and this is one for sure where you get a close above the prior extreme point. Like we're not going this is the extreme point, but before this one, this was the extreme point. So say that you do get a close above the prior extreme point, and you also on the same candle create a new extreme point. That's an area where I am inclined to label this as a setup, at least mentally, because it's something that tells me that this was just a trap. Like if you were able to break down this low but then close above the high of the prior extreme point, to me that just says, well, we got a little trap and then we got a very strong close, and therefore I should be using that as my effective setup candle. The other area really quickly I can go into where it does fall short in my opinion is if an extreme point is created on an extended range candle or on a marubozu. Right here we do have, like, let's just say that this candle didn't create a new low below this, and just say that this did create the extreme point on this candle, then you would have to fully retrace and close above it just to get a setup. And that's a situation where if the extreme point is created on this type of candle, then some adjustments, I think, need to be made, perhaps using the lucid SAR, perhaps using a following candle, saying like, if this didn't create a new low, but we got a kind of doji, some sort of reversal candle that didn't create a new low, potentially we use that candle as the high to close above to give us a setup. These are some of the areas that I've been starting to think through as I have been keeping a close eye on this indicator and figuring out where does it work well, where does it leave something to be desired, and how can we resolve that. So some things to think about if you are using that Peterbolic SAR as a trailing stop or as a way to signal entries. So did want to cover that. And now it's time for a drink of the water and a quick look at the chat. See Fibbo Swanee in the chat. He's been making some great calls lately. Definitely go check out his channel and his Twitter. Got a lot of good analysis, and I think he, if I'm remembering correctly, did a very good job of nailing that bottom. So way to go, Fibbo. Blockchain Academics says sock for president. I'm not sure if they would elect me in this costume, but hey, you never know. All right, check out gap on 4 hours, says Lech Ram, and yeah, we can definitely take a look at that. That will definitely change depending on how much we zoom in or out, but we'll see if potentially we can find what he's looking at. Yeah, definitely kind of that same gap that I was looking at that is even more significant on the 4 hour, I would say, showing that the last kind of whisker of support is being tested right here. We see if this breaks down, it doesn't look like there's any volume below. Let's go ahead and zoom out a little bit. Yeah, I mean, that's a very significant gap. And maybe points a little bit lower, maybe a few $100s lower. Let's see if we can continue zooming out. So yeah, that's pretty much, I think, the same gap that we're looking at. If we get this price action into account, then we have a gap from 9,000 down to 87.50, which, yeah, it just looks like very little volume has occurred at that price, and that's something that I really do think will need to be resolved, specifically when the price is this close to that gap. It will be hard to eat its way through all of this resistance without first resolving this gap in the volume profile. So good input, appreciate that. Cheers to XRP Andy. And what's your take on the SPY volume profile? I'll make myself a note. If we have time, I can pull that up. But yeah, after yesterday's show, we covered a lot, and there really hasn't been much that has changed. Kind of wondering if what we're seeing here is going to be forming some sort of bullish flag. It's certainly looking bullish, consolidating near the top of this, at least this close, not necessarily top of this wick. But let's go ahead and throw on a fib and see what area we are consolidating at, and that's very interesting. You could draw this fib basically as soon as you get this wick and then these like kind of red candles. You can say, okay, we have a low and a high, and let's start to draw in some fibs, and that 50% is exactly where This found support, and now then it bounced up to the 0.236, now back down to the 50. And it's interesting to see that the 0.618 is pretty much in line with the bottom of that volume gap. So if we do break down 9,000, I think 86 would be where it would head next. And it would be, there's a lot of reasons why we should expect it to hold as support. It was prior resistance. Now we have this 0.618. And then there are some higher volume nodes below that price. So we'll definitely be paying attention and seeing if this 50% retracement can hold. In general, if we get to the 50% retracement, I do expect it to go to 0.618. Would love to get Fibbo's input on that. The most important levels for me on the Fib are 0.382 and 0.618. So when this breaks down, I don't really expect 50 to hold. If you retrace 50% of this move, I would expect to come down to 0.618. So that will be interesting to keep an eye on. Anything else that we need to look at before moving on? We do want to see what these moving averages are looking like on lower time frames. So now we've got the 50 starting to get a nice spread above the 200 with price staying above that 50. This would be a situation where I'd be keeping an eye on the 9 just to see, is that coming in for a cross? Is it looking like it's turning back up, which it does look like now. So something that I'll be watching at. We can take a look at the simple moving average. So here's a pretty sweet setup where we got the cross. It did occur with the price too far away from it as far as I'm concerned. I mean, significantly too far away. Let's go ahead and see how far away that was. Yeah, like 15% is way too much. I'm more looking at like a 5% kind of threshold. If it's above that, I'd prefer to wait for a correction. And now what we're seeing, so basically what I'd be looking for is the first throwback to the 200 EMA. And now not only do we have horizontal support or prior horizontal resistance that could be expected to be turned into support, specifically with that 200 EMA. This is where it's a very interesting buying opportunity as far as I'm concerned. If we can get back down to this 87 level, the long becomes quite interesting for a number of reasons, specifically the risk reward. You wouldn't have to take on a whole lot of risk, because if it did retrace back down to 82 or so, I would no longer want to be in that trade, and the upside would be very significant in relation to that risk, specifically if you're looking at the measured move from the falling wedge or even more, which, I mean, if we get back up to 12,000, I would definitely be looking for a new local high above that 14,000 level. So this is a setup that really intrigues me. Like we talked about, the simple moving average has now started to turn up with a golden cross occurring above it, and now price pulling back to hopefully retest the 200. When price gets a golden cross, when it's too far extended, I look for a first retest of the 200 as my entry, and there are a lot of reasons why I'd be very interested in buying around 87. In addition to this 200 EMA moving up and the SMA now making a nice reversal. So that is very bullish setup as far as I'm concerned. And if we can pull back down into here, potentially fill that gap in the volume profile and get that first retest of the 200 and potentially find support at that 0.618, turn prior resistance into support, a lot of things would be kind of adding up. And when a lot of things add up, that's when I like to take a position. Okay, anything else on this chart? I don't believe so. I do I don't think there's any new developments on the cloud. Let's just make sure that nothing's happened there. Interesting how the bottom of the cloud is right there as well on the daily. So you really would not want price to fall below the cloud. If you are expecting this to be a reversal, then you really do not want the price to fall below the cloud. If it does, then that would indicate that this was just a fake move, and that would be a sell signal if we close below the cloud. Specifically, that would lead to bearish TK cross, and it would, I'm sure, resist that bullish Kumo twist. So this is a very important level, it seems like, is 86, and it may never get there, but if it does, it provides a really interesting opportunity for a long. And then, like I said, you really wouldn't have to take a whole lot of risk, because things would really start to turn bearish if we can't support above that level. And that's where I really like building positions, is spots where it's well defined where I want to get out and it's close to my entry. So yeah, it's really interesting to see that the bottom of the cloud is also waiting right in there. Something to definitely keep an eye on. And let's take a look really quickly at some Ethereum stuff. And the Chippendales haven't called in for their backup dancer yet, so I'm starting to lose hope. I may not get the call in for relief tonight, but at least I came ready to play, came ready for the game. Okay. All right. So here's a situation where, again, death cross occurred, price too far away, looking for a bounce, that first retest of the 200. If it fails to get to the 200 on that bounce, then it is definitely a very bearish indicator and tells you there's a lot of selling pressure that is kind of front running. But it hasn't necessarily too early to make that conclusion yet, because we still may just kind of turn around from here and come back up to retest the 200 EMA. And that's a situation where I'm going to be watching this thing like a hawk. And one thing that I've definitely, a pattern I'm paying close attention to, is that when Bitcoin really does rally, and it's not like a fake move, a fake out, it's really like a bull run, it's leaving alts in the dust. That occurred for a large part of the time in 2017, and it has been occurring so far this year, where that whole run up that Bitcoin had from 3,000 to 14,000, it was just crushing alts. There were no alts that were outperforming it, maybe Litecoin until it got closer to the halving. But essentially, seeing Bitcoin go up and alts go down is a strong indicator for me, specifically alts against BTC. That tells me that this is a real move. So that's something that I'm paying close attention to here. When that big massive rally in Bitcoin happened, we got a big massive sell-off in ETH BTC, which made me think, this could be the start to that next real bull run. And now, as Bitcoin has kind of gone sideways, we see this kind of getting a little bit of a relief rally, which is really what you want to see if you are, specifically if you're short-term bullish on Bitcoin, is that when it goes up, alts go down against it, and then when it consolidates, alts get a relief rally. And that's where I'm super interested in, maybe not only longing BTC, but also shorting this thing. So let's see. Okay. Let's go ahead, now that we've been talking about the SMA, let's throw that on there as well. And maybe I could have just used the settings. I guess not. Not sure. Would like to take a look at that if we can. Okay, settings. I guess we can just pull it up on the other chart. How about Bittrex? So definitely on the daily, strong bear market. And here we go. That's, what I'm wanting to see is that not only do we get the death cross, but now we've got that occurred basically after this had already started rolling over. So that's telling me that the trend is bearish and we have a sell signal, or at least it's on the verges of reversing bearish, at least on this 4-hour time scale. It kind of reversed bullish back in here. Price too far away from the cross. First test the 200, worked out perfect, and then you had the confirmation of the bullish moving average by then, simple moving average. So now here we get this thing rolling over. It's taken some time. We have this big dump off, and look what happened to the simple moving average. Like the exponential moving average turned down, like just right away turned down. The simple moving average, this thing barely even affected it. You sell off like, I don't know, what's that, 15, 20%, and the simple moving average just barely does anything to it. It's hard to reverse these things. It takes time. And this is the kind of time that it takes, is that not only you break it down, but you stay below it and allow this to start rolling over. So this is something that is a very interesting selling opportunity here at about 0.02 if it does get back up there. And again, it would be not a whole lot of risk, maybe 10%. I would be holding through something like this high here, and the downside is a lot more than that, even on a conservative end. All right, quickly, ETH USD. And this is, it's kind of, there's a lot that you could say about this setup. When the EMAs are this close together and not really angled in any direction, it really tells me that it's chop and that there's no trend. If these are all stuck together and basically going sideways, it tells me that there isn't really a trend, that we're just in chop. But on the other hand, we are consolidating above a golden cross, and this thing has started to roll up. So it could be a good spot to enter, even though it looks like a choppy environment. Again, it would be a spot where the risk is pretty darn reasonable, especially in relation to the reward, because if it gets below 175, I wouldn't want to have anything to do with it, specifically if it's like a close. And as long as it's kind of supporting these moving averages, it's going to make them turn more bullish and more bullish. And if you really wait for them to spread out, then you may miss the entry. Okay, so before getting into, I'll take a quick look at the S&P volume profile. Before that, I've got a fun trick or treat for you guys, and that is a Dogecoin chart. Certainly have never covered this in the past. I don't know if you consider this a trick or a treat, but maybe it'll be both depending on who you are. And I want to give a shout out to, this isn't my chart, let's see, somebody shared this with me who goes by Raf, so I appreciate it. This is definitely a very interesting chart, and I really like, not only can we see that it's kind of showing some signs of life at support, but these horizontal lines are actually what's interested me most. And it looks like they're quarterly, or they're 6 months. No, let's see, are they 9 month? Yeah, I guess they're 9 month intervals between each, and just notice how spot on they've been for basically calling calling tops more so than bottoms, where you hit this line, you get kind of like one more shoot up and then dump down, hit this line, kind of shoots up and then dumps down, hits this line, shoots up and dumps down. This one didn't get near as high if you were, hoping to catch something way up in here, but you realize, okay, we hit this line, this next candle is where I need to sell. And here again, topped out on the candle after this line. And what we see is that it looks quite rare to have two back-to-back periods of a bear market. Like it's generally been like a kind of a bull and then a bear, bull. You could kind of call that bear, but in general, it looks like each interval is kind of where reversals happen. And in this situation, we got kind of like almost all the way to that second. It was like 1.5. It was like a full year of selling off, just straight markdown, and then boom. And these are monthly candles. And here we're kind of seeing the same thing, where it's been basically a year. It looks like September was the top, so October is when it reversed, and now here we are at the end of October, so a year of straight markdown. I've never traded Dogecoin and never really had any intentions to, but this chart is kind of tempting. I probably won't do anything about it, but it's got me thinking. And something that was interesting is somebody was actually showing this chart. I'm not sure if it was with the vertical lines, but at Tone Vays's financial summit in Bali, there were one presentation from Da Vinci, who was talking about owning over 300 altcoins and how he, his trading method for how he trades alts. And the next guys come up and talk about Dogecoin, and you could just see Toad. It's just like, and he says something. He said, "I didn't know that this was going to be an altcoin conference." It was pretty freaking funny to have all these charts at Tone's conference. I definitely got a kick out of that, and he definitely made a funny joke. Okay, so let's go ahead and take a look at the S&P real quick. Okay. Interesting. And let's throw on that volume profile. We're probably above the high volume nodes at this point. Okay, so visible range volume profile isn't available on SPX, maybe SPY. There we go. Boom. That's kind of what I was expecting to see. Yeah, that looks bullish as heck. Yeah, lots of volume at this price, which is what you'd expect since we've been going sideways for freaking, years. It feels like, I guess not quite years, but it sure feels that way. It almost is years now, where we go sideways and we basically are, spending a lot of time at this price in here. So it's going to create very high volume nodes. We see almost no volume down here. That's because we would have to zoom out and see kind of the same thing here last time. We got a lot of consolidation, creates this huge volume node, and it's interesting that this sell-off was able to find support before coming back down to fill in this stuff here. And I think that was because of a trend line and maybe like a 200-week moving average. But you consolidate for a long time, you're going to create high volume nodes, and once you break out from that, it should become strong support, and there should be no overhead resistance. And that's pretty much my read here. We've got a big cluster of high volume nodes, and now we are above, it looks like right in here is the real big clusters. Now we've got the moving averages coming up, so there should just be a ton of support down in this 290 area. And if we can, it's no secret that if we can really create an all-time high and support a throwback, then it should be off to the races. And we've created a number of new all-time highs, but we've never supported a throwback. Like here we create a new all-time high, but it doesn't support this throwback. Here I think it barely created a new all-time high, so it doesn't even give it a chance to really throw back. Now here we've got a new all-time high. If we can kind of keep moving and support a throwback, it will really be ready. Maybe we get another sort of something like this, but as long as support keeps moving up, the more time we spend up here and the more support keeps moving up from the moving averages, the more you'd really expect us to take off in a big way. So I do see a whole heck of a lot of support. If this does give us another one of these, like what we've seen on these last 3 times, and pulls back to this 292 area, that would be a great spot to enter. I'm not interested at all in buying this action up in here. Basically anytime we've created a new all-time high, it's been a sell, and we're overextended from the moving averages. I never like entering in that environment. I like entering near the 200 EMA, and that's something that if you're entering near a long-term moving average, it tells you you're getting a pretty fair price, like an average price over the last 200 periods. This would be days. If you're able to buy the 200-day moving average, then you're getting an average price over the last 200 days. And that's kind of another way to dollar cost average. When people dollar cost average, they're trying to get an average price, right? You're not trying to get in buy dips. You're trying to basically avoid buying tops. You're trying to just get an average price. And you can do that by dollar cost averaging, buying every day, every week, every month, or you can do it by entering near long-term moving averages. That's just another way to get an average price. Doesn't mean that it's going to be a good entry, but it just means that you are, it's kind of another way to dollar cost average. All right, so we are at about an hour. I'm going to take another drink of my water, a quick look at the chat, and then call it a day. See you later, Fibbo. Weekly Consensio, that's been definitely bullish on Bitcoin for quite some time. Not sure BTC wants to turn bullish on Consensio. I don't think it ever turned not bullish, but we can, maybe it gave us a little bit of a reason to be concerned. We can take a look real quick. Then I'll have to adjust all my moving averages, and I'm having trouble with that here today. For whatever reason, it's not wanting to let me in. Let's just take a look. The most important, oh, come on. Yeah, I don't know. Just having issues today. I guess we'll just refresh again. Screw it. Okay. The most important part of Consensio is the angle of the long-term moving average. I think Tyler would use 30. I always tended for 32, and that's the only time I'm going to get to reset it, so that we'll just have to do. So the angle of the 30-week moving average is really what tells you to be bullish or bearish. It's not necessarily the crossovers. Like, we got bullish crossovers right in here, but Tyler didn't buy it. He didn't buy because the angle of the long term was still down. He waited for that to at least flatten out. Then he ended up buying somewhere in here as it rolled up. So, and that's something that can be kind of tricky, is when looking at Consensio, it's easy to really focus on the moving average crossovers when, and that's when, after trading it for a little while, when I realized how much more important the angle of the long-term moving average is. And this is a good example. We brought this up back in here where I kind of wondered and said, like, somebody asked me just what Tyler would think of Consensio or something along those lines, and I said my best guess is he'd probably be buying based on us testing a bullish moving average. Sure, the short and medium would have gotten a bearish crossover up in here, but that's going to happen multiple times in a long-term, bull market. And here, I think that he was back in here very interested in buying around the 7,500 levels, and I believe that was due to a horizontal and where he expected this moving average to be. So when you have this bullish moving average that really hasn't done anything to show signs of a reversal, I think that this is where he would have been very, very interested in buying, and that's something that I just go, I have a little bit different I trade a little bit differently myself, and this is an area where I think he would have been spot on, just seeing this bullish moving average. Consensio has been very bullish this whole time, even though some of the short-term moving averages cross bearish back in here. What matters is the angle of this long-term moving average, and now I'm sure those shorter-term moving averages are crossing back to give us a fully bullish setup instead of just a bull market. And I'm not going to pull up those because I'm having too much trouble with TradingView. Okay. Can I look at gold? I'll take a quick peek. And then I'm going to have to call it a day. Nice setup there off of that 30 moving average. Inside the 32. So this is starting to show some signs of life, and it looks pretty darn interesting. But the only thing that really matters to me is going to be this SAR. I'll be staying away until we can break that. As a matter of fact, I better make sure I have an alert set. I may not. And just to show people that are watching how you can set an alert on this indicator, I have been asked that before. Just make sure it's showing on the chart where you see the SAR on the chart, and click this right here. And then you say XAU USD crossing instead of value, instead of like a price level of 1511 or whatever, you do lucid SAR. And then make sure it's not per close, because you don't need to wait for close, just only once. And then I learned that you don't have to extend. I used to come in here and extend these, but what you can do is just say open-ended, and then it stays open until that happens. So basically, I'm not very interested in gold until we break through that, and when we do break through that, I'm a buyer. Pretty much as simple as that. Okay, thank you all for tuning in. I appreciate everybody joining me for this first annual Halloween stream. Definitely send me some pictures. Anybody else out there rocking a costume listening in? I hope that you all have a good night. Sun is starting to go down, so that means it's about time to get into some Halloween festivities, and I wish everybody we'll wish you all to have a good night, and thanks again for tuning in.